Alright guys, so today we're going to be going over today's trading recap. I took no trades as you can see here on the account. And yeah, we're going to go over basically the best setup for today. And we're just going to see, like we're going to go over what ideal scenario we would have been looking for today. So today we had this, internal array form. We had the counter range high sweep at the highs, and then on the 4 hour time frame we also had that form. Then of course it closed at 10 a.m. to then eventually form the 2 a.m. candle for expansion. So anything after 10 a.m. would have been very, very ideal to enter, because again, you want to see the market form this, come down, sweep, and then eventually 11 o'clock you want to see after the opening of 11, is this going to hold? Is this going to be actual, like manipulation to then eventually push you down to the downside here? And then we also had a 30-minute PDA right here, which was in the form of a BISI with clear sell side objectives. Of course, the longs wouldn't have been looking bad either at this right here, sweeping the lows to then eventually push up higher. Just in my honest opinion, I believe that after 10 a.m. would have been your best option, because again, we didn't really sweep the lows here. We don't really have a higher time from confluence. If we actually look, we did sweep, but you don't really have a draw unless you're really targeting this right here, which is the previous candle. And then on the 1 hour time frame, you have another 1 hour candle range high sweep. So longs would have been somewhat, I just really didn't look at longs, especially with how close market open was. And then all these draws right here forming. But we're gonna go over the long scenario and then the bearish scenario here. But so we, you had the sweep from the 1 hour time frame here, and we're gonna mark this one out a little bit different. And then you also have the 30-minute candle range high sweep, candle range low sweep, and then you have the 15-minute one right around here at 9:45. And we're gonna mark this one out with a different outline, and then boom. So 9:45 would have been the most ideal, not 9:30, not market open, but at 9:45 you had that 4 hour candle range high sweep around 6 a.m. and then eventually next 1 hour one, then you had a 30-minute and then a 15-minute one. On the 5-minute time frame, there is no real confluence here other than the 5-minute change in state of delivery to then eventually take you guys up to the target, which would have to be this candle range high objective. And if we're being objective here, the risk to reward would not be the best. Even if you have it at the rejection block right here, this is a negative R, negative 0.5 R. Of course, you would not want to be taking that. So the best ideal scenario here would have to be an inversion fair value gap. And for that entry, it would have to be this 2-minute inversion fair value gap right here. Stops, it just depends on where you want to put your stop loss placement. In my honest opinion, I think a 50-point stop is healthy, to then eventually target around a 54-point stop. It would, this would be a healthy trade. A 50-point stop with a 50-point target. You go break even once you reach above these highs right around here. Very nice trade, honestly. Very healthy, honestly. Very, very, very healthy trade. Go break even, boom, target these highs. Nice trade. Nice little dub you take right here for the longs. And yeah, longs wouldn't have been bad, but I did also see shorts, so we're gonna go over that too. And then yeah, we're gonna see what we were seeing for the shorts. So again, after 10 a.m. would have to be ideal. 11 a.m. you want to see if the market is going to continue to manipulate, but you have no real higher time from confluences to continue pushing you up higher, except for the 30-minute BISI. So once you wait for the market to retrace into this 30-minute PDA array, you see the market form some form of rejection, and then it continues lower, and then you move up higher. Here, there would have to be no real entry other than the 1 minute change. 1 minute change in state of delivery here if you did enter. But in my honest opinion, I just don't really see this being a good entry, because again, the market is moving down lower, and then you continue to the downside. And again, you have to wait for this form of inversion on like the 2-minute or the 3-minute to then eventually form and give you that strong confluence. Same thing with the 5-minute, waiting for this 5-minute inversion here. But again, you're just so overextended into the range. And again, if you miss this, most optimal would be to just sit out and wait. But my girlfriend's calling me, and I'll probably have to pause this video right now. This would have been the best setup for the shorts. You feel me? Like after like 12 o'clock, candle close, strong distribution, continuation to the downside, targeting the sell side objective. Very, very nice. And then that's really it. That's really it. You also have this point of control from the new range extended here. Again, market moves down lower, you enter off of that strong distribution. Value area low is disrespected also with the point of control. It is unbalanced and is seeking that form of imbalance, and it doesn't want to be balanced. So the downside here, just waiting for the market to reach that range low and those sell side objectives and midnight open. So that is really it, honestly. Yeah, if you really extend the range from the higher time frame range, right here, right there, you see the market is seeking this low volume node right here also. Again, this is tick data, so not really optimized online, but pretty much really it.